Let's first look at the deal capture sheet. The deal capture area is in the left-hand top corner. The look and feel of this area is very similar to the Origin FX simulator you may have used. Let's go through the deal capture area very quickly. Left-hand side column captures most of the parameters required for pricing an option. These include parameters provided by the user. All user input cells have blue fonts. We will be using USD INR as the currency pair in this simulator. Spot, interest rates, volatility comes from the market data. The quoted market data is on the right-hand side in cells with green color fonts. You can see the USD INR spot rate, USD money market curve, USD INR FX swap curve, and USD INR ATMF vol curve here. INR interest rate is calculated from spot rate, FX swap rate, and USD interest rates. You can also see the day count basis of both these interest rates. On the right-hand side of the deal capture screen, we can see the option Greeks. The last input cell here contains the deal option premium. Sometimes, the actual option premium could be higher or lower than the fair price, primarily due to the profit margin charged. The fair option price appears in the last cell here. By default, we have put this number to be same as the fair value. However, you could change it if required. At the bottom of the screen, you have 5 buttons. Start Stop Simulation button is a toggle button for turning the simulation on or off. The market data are simulated when you turn it on. You need to have the simulation mode in on position for this button to work. This feature needs a separate license. Delete Portfolio Trades button clears all your option and delta hedges and funding trades. Delta Hedge button allows you to capture spot delta hedge for the whole portfolio. Capture Trade button allows you to capture the option trade and move it into the portfolio. Exercise Option button should be used when you want to exercise expiring option trades on any given date. On the right-hand side, we have some portfolio-related information. You can see MTM of option trades, delta trades, MTM of both option and delta put together. You also have a sum of all premium the traders has to pay and receive here. Your portfolio P&L will be based on all these factors. We also have a Greek summary of the portfolio here. The Greeks have been time bucketed rather than just adding each of them up. For instance, if you have 4-month option in your portfolio, then its Greeks will appear under 3-month to 6-month bucket, which will appear in this row. Thus, Greek in any row describes sum total of a specific Greek of the options whose expiry is in that bucket. The total row has sum of all the individual Greeks. Just below the option portfolio delta, we have delta coming from delta hedge trades done. Net delta is nothing but sum of option delta and the delta hedge. It gives the residual delta hedge that is required to be done to neutralize the delta completely at any point in time. Keep in mind that this will keep changing with change in spot and other market parameters. Just to the right of this, we have a place for defining the date today. This date will be used to drive the whole simulator. The area below this is primarily for funding trades. Trader needs to do them to ensure that he has requisite amount of funds to honor all the trades he has done. One may use combination of FX swaps and overnight lending and borrowing for managing these cash flows. Besides this, You have 3 sheets that hold all your trades and do MTM of each of these trades as well as calculate Greeks. Sheet USD INR holds all option trades. Delta Hedge holds all your spot and FX swap trades, while funding holds all the lending and borrowings. Setting is used mainly for controlling market data simulation, which is not covered in this video. Let's go back to deal capture sheet and capture a trade. Let's set today's date as 3rd April 2013 here. Before starting, let's clean all the trades by clicking Delete Portfolio Trade button. As mentioned earlier, we will be restricting ourselves to option trades only in a single currency pair USD INR. A client comes and asks you for a price of 6 months USD INR call for 1 million USD with strike of 61.00. You quote a price of 1,649,262 INR. He sells the call option to you. Of course, you have verified that your bank has the required credit limit for doing this trade. Let's capture this trade. You could specify tenor in days, weeks, months, and years. Maximum tenor for option is 1 year, as our market data only goes up to 1 year. If the date is beyond 1 year, then you will get an error message. We could have used a specific date here too, say 7th October, instead of a tenor. The spot comes from here and the interest rates and vols are coming from here. Since it is a 6-month option, our USD interest rate and vol numbers are same as the quoted market levels. The interest rate in variable currency is coming from this implied interest rate column. The fair value of the option appears here. You can see the Greeks. Delta is close to 50% as the strike is close to the forward rate. The moment we capture the trade, all our portfolio parameters are updated instantaneously. The option MTM and premium received are exactly opposite numbers. All the Greeks appear in 3-month to 6-month bucket. We can see that the delta of the option is positive, which is expected as we have bought a call option. It implies if we do a delta hedge, we will need to sell approximately 500,000 USD INR. Let's see what happens if we click the delta hedge button. We see exactly the opposite number here. We will need to sell spot for delta hedging. Of course, you are unlikely to sell the exact amount of delta as the market usually trades in tradable lots of say USD 500,000. In our exercise, we could hedge the precise number if desired. Sometimes the market data may change while you are trying to think what should be done. This button allows you to update the market data and the new delta hedge amount. When you click this button, the USD INR spot sell trade will get captured, bringing down the delta hedge requirement of our portfolio to 0. Let's capture the trade. You can see that delta hedge has taken care of the spot risk for the time being.